Can you guys hear me now? Are we good now on YouTube? Are we good? Are we cooking? Are we cooking yet? Can you guys on YouTube hear me? Now here we are, guys. Now we're cooking on gas. What's up? How we doing on YouTube? Can you hear me all right? I know you can hear me inside the Discord, guys. Come on. Chris, thank you very much. Oh my God, we got there. We got there. Oosh. Good stuff, Axe. Nice. So obviously the purpose of today's session is to help people who have the indicator just get their settings set up so they're ready to cook, and then also answer any questions if anybody has any questions about the specific indicator. So if you have any questions, guys, just feel free to fire away. Yeah, it will be dealing range day. Yeah, I'll go with that. I'll rumble with that. So super excited for you guys to start utilizing it. The team is, the coders behind it have been working super hard. They've had to deal with me for God knows how long and yapping away like a little terrier dog. So, yeah, I hope you find a lot of value in it. It's an awesome piece of kit. Super, super proud of it. It does exactly what it says on the tin. So, yeah, excited for you all to start saving your time, saving energy, so you don't have to manually draw your dealing ranges ever again. So is everybody here already got access to the indicator? They've already got it. They've already got it opened. They've gone through that step. If anybody's still struggling with getting access to it, can you just give us a holler? Can you just say, well, yes, sir, I'm struggling? Because if you are, I'll help you out. I will help you out. Anybody struggling? Looks like everybody's got access. Everybody got access? Okay, so I'll just for the sake, because this is obviously being recorded for others who aren't currently available on the stream. So when you get access, you just want to come over to the X levels over here. This is a PDF which is going to give you a load of information about X levels and how to utilize it. Which will just open up into a PDF file when you click on that, and you'll be able to read it at your leisure, which will give you essentially what X levels does, all the different use classes and how I go about utilizing it, and why I developed this this framework for price delivery. Okay, so loads of examples in here, so make sure you go and check that out if you're have questions about how to utilize X levels. But beyond that, you just want to go into X levels here. You click on this, and then you want to claim the indicator access. That's all you have to do inside of WAP. That's all you have to do. How would you get access? It's a great question. So I'll put a link. There you go. So all you have to do is claim your indicator here, right? So that's all you have to do with inside of WAP. Once you've done that stage, the only thing you have to do left is go to TradingView and click Control R, which will refresh your screens. And then just come up to the indicator tab up here and go down to invite only. Okay, and you'll see the X Levels Pro indicator available for you inside your invite only. Just click on that and it will add it into your chart, and it will look like this inside your chart. Okay, so that's your first step. That's all you have to do. If you're struggling and you can't do that, please submit a ticket, and either myself or one of the admin guys will help you out getting set up. But it really is as simple as that. All right. Just 2 seconds, guys. I've got a question here. Okay, so once you have that, what you need to understand is that you need to put it in every single pane that you want to track the dealing ranges on. Okay, so for me personally, this is my monthly, weekly, and daily chart, top left. Top right is my hourly chart. That's the only time frame I use for on the hourlies. And then this is my execution pane, so 15 down to 1. So all you need to do is just repeat that process into all the panes where you want the indicator to be showing. Okay, that's all you have to do. And so the reason why I do that is because I utilize the weekly and the daily for bias, the hourly for dull, for draw on liquidity. As you can see here, we've just been coming down to fair value and 62 on the premium, just bouncing, and then coming down to fair value today on the weekly. So I use that for bias, so higher time frame points of interest. And then below that, which is this pane, is my execution pane. So this is where I start to dial in on the lower time frame, which is 15 down to 1. So essentially I just scroll between my 15, right, my 5 minute and my 1 minute. Okay, so those are my executions. And then on my site, on another window here, I have a 15-second chart, and that's my execution pane on my, whether that's Ninja, whatever that is, I'm using it as my platform. Okay, so let's go into the indicators. So what X levels does, it measures dealing ranges in the way that I define a dealing range. And it plots out premium and discount X levels, which is where price will originate a move from. Every single trade strategy or model that you utilize will come from an X level. Believe me, and I will show you examples in a minute. I'll even show you today's PA. All right. So whether you trade the way that I trade, and I trade turtle soups, the way that I teach inside Red Pill Trading is turtle soups, and I have 8 models all developed around the turtle soup, is irrelevant. You don't have to necessarily trade the way that I trade. You can trade any strategy. You can trade inverted fair value gaps, for example. And I'll show you an example of an inverted fair value gap in a second, how you can utilize this to your advantage. So you know exactly where the low is going to form. Okay. So what you just need to take away from this point is that every single trade that you take is going to originate from an X level. So you can either trade the turtle soup into your PDRA in alignment with an X level. Okay. Or you can wait for your secondary entry trade, whether that's mitigation, whether that's 2022s, whether that's your inverted fair value gaps, whether it's a breaker block, whether it's a unicorn, whatever it is going to come off an X level. Okay. So every dealing range, and this is a 15-minute dealing range, and I'll get into the settings in a minute, but it's important that you all understand how it all works. This is a 15-minute bearish dealing range, okay? And the way that a dealing range is defined in terms of Red Pill is it's a swing high which puts in a new low that closes below a former protected low. That validates a new dealing range. And within inside that dealing range, you have a premium and a discount side. So these, and those percentages for a discount and a premium are 12, 21, 29.5, 38, 50, 62, 70.5, 79, and 88. Okay, so those are your percentages with inside of a dealing range which define true premium and discount. Okay, so when you have a bearish dealing range, this is obviously going back up into a premium, and this is a discount. All right, so this is a premium and this is a discount. It's very different to ICT, and ICT only has return to OTE. So he would only have the premium side of a dealing range, right? For continuation short, there is a discount side and a premium to every single dealing range. Okay, now that dealing range stays valid until either this low or this high is violated. And what I mean by violated is that price closes above. Okay, so you can see how this is our weekly. None of this inside of here is a weekly dealing range. This is our weekly dealing range. So until this low gets violated or this high gets violated, that is our weekly dealing range. Until this low gets violated or that high gets violated, that is our daily dealing range, right? Because we broke structure here on the daily. So this is a bullish daily dealing range inside of a bullish weekly dealing range. On the hourly, this high, which put in this low, which closed below a former low, is our hourly dealing range. So we have a premium and a discount. So what you can clearly notice, and this is how we were trading this morning, is that we are in a deep ass premium across the board. Premium on the daily, premium on the weekly, premium on the hourly, and at the time during London, we were inside of a premium on the 15. If you're inside of a premium, you want to be going short. If you're inside of a discount, you want to be going long. Okay, so that's just a very, very brief overview. Of course, it goes into far more in depth than that in terms of how you can utilize it. But that's a nutshell in terms of how dealing ranges are drawn and what X levels are. They define true premium and discount. Your job is to enter in trades inside of a higher time frame discount, and then you drive price back out through the dealing ranges as you get up into a new higher time frame POI, okay, in an alignment with an X level. Okay, so for example, if you were trading today and you traded today short on data, you traded a deep premium on the hourly. So 88% is a deep premium. So you'd be looking for your PDRA in alignment with that on the high, which also coincided with being inside a deep ass premium on the daily and also in a weekly. You want to be going short inside of a premium, not long. Okay, so this is where you would, if you're on the high, you're now looking for price to drive that back through dealing ranges to get to new POIs. So in here, 62 on the hourly, but more importantly, weekly fair value. Okay, so you're now back down at a high time frame POI, right? So you've gone from high time frame POI, broken through all the dealing ranges, 1, 5, 15, got back down to a higher time frame POI. You're interested in higher time frame points of interest because that's where the institutions step into the market. That's why you trade them. Okay. So today, just looking at today's, if I go to the 5, let's wait for this to load. This is why it's important. So this is a 5 and a 15-minute dealing range. They're exactly the same. So the 5 and the 15, swing high, swing low is the same. So here you can see that this breaker block on the 1 minute, if I just switch this to a 1 minute, if you were bullish today, there's your breaker block, low, high, lower, low. Just wait for this to load in. Right inside of a discount, 21% on the 5 and 15. So you have an X level in an alignment with a PD array to go and trade back up into a premium. So you've gone discount, premium. So back into a higher time frame premium. Also aligns with being 79% on the hourly. Right? Again, a new POI where you can look to go short. Right? So this is how you utilize X levels. Okay, you're always moving price from a premium to a discount, searching for inefficiencies in liquidity and price. Right? So this is a 1 minute widget, and I'm going to show you my settings in a second. But if you were trading this breaker block in alignment with being inside of a deep ass discount, being in alignment with being at 62, which is still technically a premium on the hourly, but at fair value on the weekly, higher time frame POI breaker block, you're going to look for a break of structure on the 1, and then your next time frame is going to be looking for price to get up into the 5. So we're now inside of a 5 and a 15-minute premium. Beyond the 5 and 15, you're going to look at the liquidity. Okay, so I know this is a lot to take in if you're new, but catch up. Let me just pull in a quick document. Where are we at? Not that. Okay, so this is from inside Red Pill. So this document, so essentially this shows how price moves. Okay. All right. So this is essentially your high time frame POIs. This is your X level, and then price moves back through the dealing ranges. The time frames that we utilize and that we're interested in are the 15-second, M1, M5, M15, hourly, daily, weekly, monthly. That is it. There's no other time frames. So what happens when you get to your higher time frame POI, i.e. our breaker block at the 5 and 15-minute discount in alignment with 62% on an hourly but fair value on the weekly, higher time frame POI, we're now anticipating price to move back through these dealing ranges up to a new higher time frame POI, at which point the process repeats itself. This is Enigma, is what I'm teaching you. Okay, so price will go premium, discount inside of that 1 minute dealing range, as I've just shown you. Then it will go into a 5 minute, right? Premium, potentially offset, accumulate back into a 5 minute discount, breaks the 5 minute liquidity, goes into a 15-minute premium, right? Or an hourly premium in the case of this example, right? At which point you're now inside of a new higher time frame point of interest. If that aligns with X levels and context for a short, you just repeat the process. So now you'd be looking for the 1 minute to break, 5 minutes break, 15 minute as you move back into a higher time frame POI, right? So it's the principle of price moving from a premium to a discount, seeking inefficiencies in liquidity. That's all price does. So above the 1 minute is liquidity. in between the 1 minute and the 5 minute high are inefficiencies. Between the 5 and the 15 minute liquidity pools is inefficiencies. And you keep repeating the process until you reach a POI. Okay, so if we just go back to this, you can see that we came down to a higher time frame POI. This would essentially be your circle because this is your 1 minute dealing range. You've now broken the 1 minute, right? You've taken the liquidity above the 1 minute and you've now gone into an inefficiency inside of a 5 minute premium inside of an X level. All right. So there's ways you can stack confluence on top of this. This is being side. There's loads of other things, but you know, that we could look at in terms of framing context as to why you could go short here, for example. But that's just to give you an indication of X levels. All right. Okay. So let's get into some settings. So the way that I have it set up is very, very simple. So on this lower pane, you have the opportunity on any pane that you utilize, to be fair, the opportunity for 3 different dealing ranges. Okay, so dealing range 1, dealing range 2, dealing range 3. So they essentially are different time frames. You can select any one you want. However, I've just given you the time frames that I use. Monthly, weekly, daily, H1, M15, M5, M1, 15 second. That's all you need. Trust me. You do not need any other time frame for how price algorithmically moves. You don't need 90-minute cycles, 30-minute, all that nonsense. You don't need it. But you do you. So on the top, on dealing range 1, I have a 15-minute. On dealing range 2, I have 5-minute. And then on the lower time, the last dealing range, I have a 1 minute. Okay, so those are the 3 time frames that I have on this chart. On this one, I have the monthly, weekly, daily on my top left. And on the top right, I literally just have the hourly, because that's all I track on that window, right? And then next to it, you have the ability to change the way that you present that dealing range. So you can have it extend to current, which essentially is just going to give you a block across your chart. Okay, so it fills in the background like that. Okay, or if you want it like me, which is extend lines to current price. So essentially what that does is you get a little shaded area here, but then it projects price across. So it's not so intrusive into the way that you want to read price. Finally, your last option is that you can do a right-sided widget. So essentially that's just going to throw price over, throw the 15-minute dealing range over here. Okay, so that's entirely up to you if you want to do that. I personally like to have, you see how it's gone over here. This is the 5-minute dealing range. That's why that's still there. The 5 and the 15 is the same. So it's entirely up to you how you want to, where you want to place your dealing ranges. I personally like to have my 15 because that's what it's like your bellwether chart. I like to have that as extend to current price. Okay, so then below that, you obviously have your 5-minute chart. I also have that as extend to current price, but I have an offset of 30. So an offset is essentially where this triggers or where it reveals the X levels, you know, off of number 1. So I have, this is a 20-point offset. This is a 30-point offset. This is a 40-point offset. So this is my 1 minute down here, right? Okay. So there's complete customization ability in terms of how you present your X levels. The next line, which is obviously level style, depicts how you want it to show. So you can either have a solid line, dashed line, and then the thickness of that, right? So I have my 15 set as solid, my 5 set as dotted, and then my 1 minute is a dotted. So my 1 minute is a right-sided widget with a 40 offset, right, with dotted lines, which throws it over here. Okay, so the way that I read price is that I'm executing inside of here on my higher time frame, 15 and above, and then I'm utilizing the principles of X levels that I've just shown you to drive price back out through the dealing ranges up to a new higher time frame POI, right? Okay, so this just tracks the 1. So for example, you can see here that price is literally just bouncing. A discount on the 1 can go back up into a premium to go for continuation, for example. So I have my 1 here, but also at a higher time frame POI, this is where I can flip this dealing range up. I basically look for the discount to go long, right? So if we go back to this breaker block, for example, and I just put a manual one on for now, right? If I wanted to trade that breaker block long, I can go long outside of a discount, right? I pay myself in a premium hold runners for liquidity, or hold runners to get back up into my 5-minute premium. Okay, so that's what I utilize my 1 for, as a right-sided widget. All right. So that's how you set the these top sections up, right? The DR markers is essentially, as the name sounds, it's the DR markers. So it's how you want these presented. If you want these huge or small, okay, and also these percentages on the side. So that's how that's basically how you want those presented. Beyond that, you have the ability to customize the colors. So you can change the colors of premium and a discount. So these lines, you can change those colors on any time frame. So if you want a slight differentiation between them, you can do. I personally have them all the same because I've got OCD. But you can change those colors if you want for each dealing range. Okay. Below that is manual DR. So this is basically if you want to change where it's measuring the dealing range from. Okay, I personally have it off because it's very rarely wrong. But if you do want to double check, you can just switch that on. You can just switch this on and then you get a drag bar and you essentially drag it to the time where you want it to start calculating from. So that's what that's there for. You can also change the color. Below that is your the DR table. So this will basically tell you where you sit on the timeframes that you have charted, whether you're inside of a discount or a premium, and it will give you the percentage. Okay. So on the 1 minute, we're in a discount, right? In the 5 minute, we're inside of a discount, right? 48%. On the 15 minute, we're also in a discount. So from 15 down, we're inside of a discount. On the hourly, we're in a premium, 72% in a premium. On the dailies, we're inside of a premium. So you can utilize this for context. Again, remember, you want to be going long inside of a higher time frame discount. Okay, going short inside of a higher time frame premium, right? So that will give you those delineations, and you can decide where you want it. Basically, you can either have it top right, wherever you want to have it placed. Right? I personally have it top right to keep it away from the important stuff, the charting stuff, right? So, sorry guys, I'm in a trade. Just bear 1 second. So yeah, by the way, I'm looking for price to come and take out the previous day's low if you're asking. This is a reclaimed order block on the high. If you're wondering what these yellow lines are, it's a reclaimed order block. So I'm personally looking for previous day's low to go. But beyond that, you have the kill zones. So the kill zones are when the market is most volatile, okay? And you can have these delineated by these boxes essentially. Whether you're a forex trader or whatever, you can change these. So you have the ability to change the times. Okay, I go forward and back with delayed SMT with daylight saving hours. Right. So if you are inside Red Pill Uni, I have those hours in which it goes forward and backwards with inside the macros sheet. So that's how. You turn those on literally just by hitting the tick. You can again change the colors if you want. Below that is opening prices. So these are your vertical lines that you see on the chart and horizontal. So I use these for midnight open price theory, which is the principle if price is above midnight open price and you're bearish on the day, you're inside of a discount. If you're below midnight and you're bullish, you're in a discount. If you're, for example, bearish on the day and you're above 8:30 and midnight, you're in a deep premium. Okay, so basically the principles of midnight open price theory. Opposite is obviously true if you're bullish, right? If you're below midnight open and you're below the 8:30 price, you're in a deep discount. Okay, so I utilize those for that. And you also have those. So it's basically a 3 and 1. Okay, and then you can just change how those are presented. Okay, so that is everything with inside the indicator. If you want to go back and look at previous data, you can do. Just go to show previous DR, and it's going to go and key out all of your previous dealing ranges on that time frame. All right. Hey, what's up, too? How's it going, bro? So you can see how it just goes back, and you can go back through your your dealing range time frame. So if you want to go back and have a look, right? So if you want to see where we actually left on this time, we left again 88 deep ass premium is what we wicked into on data distributed, took out the 15-minute low. So if you want to go get some little context or read back through price, Just flip on your history and you can look at what's taken place. All right. It's completely undeniable how price moves using X levels. I promise you. Once you get the gist of it, you can't unsee it. Once you see it, you can't unsee it. So guys, just on for people on YouTube, if you can just say "what's up" to this indicator is fire, that would be appreciated, because Tu and the guys have put in a lot of hard work in the backgrounds. They've had to, as I mentioned previously, deal with me harping on at them for the last couple of months, and they've done a phenomenal job bringing my theory, which is essentially my life's work, into an indicator. So for me personally, awesome work too. Appreciate you dropping in as well. And also you guys will be familiar with Keck. Keck the Mr. Discord. So yeah, what's up? Appreciate you. Appreciate you too. Amazing work, guys. Tom, you're more than welcome. You're more than welcome. So for those who do say thank you, whether you reach out privately or on Twitter, I appreciate you. Yeah, so that is essentially everything in terms of how to get set up with the indicator. Has anybody got any specific questions about that? Anyone struggling to get onto the indicator? Anybody want specific questions about it? I'm here for you. Ah, busy. What's up, dude? Setting off the bombs. Ah, bosh. I'll tell you, when people finally realize what this does, it's how price is delivered algorithmically. It's completely and utterly undeniable. So let me just show you some examples. So if you go to the website, okay, and you go look at some examples. So this is an example of you guys aren't going to be able to see that, are you? If you go to the website, you'll be able to see these. So this is an example of taking a secondary entry off using an X level. So you can see how price comes down to fair value on the 15-minute dealing range, right? Which is being at 62% on the premium side and the hourly, which was fair value on the daily, on the weekly, that you can see here. You don't necessarily have to trade that hyper aggressively. I personally do. I'm a turtle soup trader. So the sweep of this liquidity into that, and this happens to be a 15-minute BISI upper quad. That's what I would trade into as an IFED. Okay, so if you didn't want to trade that aggressively, but you then saw your inverted fair value gap, you've now got your range expansion, right? You've then got your confirmation of price leaving a X level in alignment with a PDRA. Okay, so whether you trade the turtle soup, whether you trade an inverted fair value gap, whether in this instance you're trading a breaker block, it's irrelevant. I don't care what you trade. All right, I trade turtle soups, I teach turtle soups, but you can trade any model. Just overlay it with this price delivery framework. It is how price moves. Okay, so in this example, comes back down into the premium side on the 15. Okay, so price can go outside of a premium if it's incredibly bullish. In this example, price had already manipulated into a discount, so it didn't need to come back down here. So price going outside of a premium, higher time frame X level, goes out of 70.5. There's your POY. This was actually a propulsion block. Okay, so there's your primary entry, turtle soup of this low. Your secondary entry is a breaker block. If you trade breaker blocks, right? But all keyed off the X level. Okay, so if you go to today's breaker block, okay, this is another classic example. Okay, so if we look at our 1 minute, this breaker block on this low, funny, where does that sit? Okay, so it gives you confirmation, right? You know that price has come down to fair value on a weekly. This is an opportunity for the institutions to step into the market. I'm automatically then looking to frame entries long because we are now back down inside fair value, looking for a bounce, right? There's other stuff we can lay on top of this that I teach inside Red Pill Uni. One of my models is inside of here, right? But once price breaks through, you've now got your breaker block, low, high, lower, low. Okay, so fair value on the 15, right? Your 5 and the 15 is the same in this instance. Okay, your 5 and the 15-minute dealing ranges are exactly the same. Okay, so price breaks the 1 There's your circle. Back into a 5-minute discount. Okay, so if managing this was like your concentric circles, back inside of a discount, to then move back up into a premium. All right, which is this. All right, going back to this, how price moves from a higher time frame POI nucleus goes back through the dealing ranges. As we move back up into a new higher time frame POI, then you repeat the process. Yeah. By the way, you have that inside of the WAP hub if you have the indicator. That's inside the PDF, the X levels PDF. All right. So your POI here, this breaker block, okay, you want to enter in here. Now you're just utilizing the principles of X levels to take price back through price. Right. So you're entering in here on this breaker block, discount, after hitting a nucleus higher time frame POI, right? Your higher time frame POI in alignment with an X level, 50% on the weekly, 62 on the hourly, anticipating a pullback into this M5 SIBI. All right, I was looking at we traded up to the lower quad today inside of Red Pill. All right, if you took this long, you're now going back through the dealing ranges. Okay, so 1 minute, break 1 minute liquidity. Your next thing you're looking for is your 5 minute and your 15 minutes. Your 5 minute and your 15 minute. Remember our dealing ranges: M1, M5, M15, H1, daily, weekly, monthly. You don't need anything else, guys. Okay, so if you break the one, you've got inefficiencies and liquidity. Right, in between every single one, right? So inefficiencies, liquidity, inefficiencies, liquidity, inefficiencies, liquidity, as price moves back through the dealing ranges. Okay, so once it's taken out that 1 minute, it's taken liquidity. So you're going to go to your next time frame, which is your 5. The 5 and the 15 is the same in this example, so these two are the same. So you're going to look for inefficiencies. This is a fat ass inefficiency. But it's back inside of an X level premium, right? So the question you're asking yourself is if you are bearish on the day, and for me, you've got a fat reclaimed order block up on the high. This is a massive institutional short position, right? Is that high going to hold? Well, this high went right up into your reclaimed order block. So I'd be looking for that high to hold, right? So if I was short, this is where I can start looking to frame PD arrays to go short, right? Start framing context to frame a trade around that level. And there's a host of other things that I teach inside of Red Pill trading in order to confirm a high probability trade entry. All right. Okay, so this, if you're now looking at this, upper quad, lower quad of this H1 SIBI. Once we've broken through, this is now resistance. We have an intermediate term high up on which formed on this particular day. This is an intermediate term high on this day. Filled this 15-minute SIBI. There's your if. This is my mechanical TS model, right? Measuring out your extensions. So that's why we were short biased today, going into data, right? With a high time frame context of a reclaimed OB with a previous day's low, which is left wide open because we've got a fat NASDAQ divergence on that low. So just macro bearish until proven otherwise. Okay, so if you start framing all these things and start piecing it all together, you can start looking to dial in your trades at higher time frame POIs. So if you were looking to go short inside of a premium, up inside this POI, where you're at 79% inside of a premium, you're back at 38% on the weekly, which is a premium, right? This right here, it's a fucking premium. Premium, higher time frame X level, higher time frame X level, higher time frame X level, higher time frame X level. Your job is to go short in a premium, long in a discount. So this morning, off this low, You are at a theoretical fair value on the higher time frame. Fair value. It's an opportunity for institutions to step in. It's neither a premium nor a discount, but it is an opportunity for institutions to step in. This is technically still a premium. However, if you waited, right here is a discount on the 15. All right, if you had context to then drive back up into a premium, there's your trade off the breaker block if you took it long. Right, personally, I'm short in here as well. The runner got stopped. Right, so fair value on the 15. Right, same principle, break the 1. Right, every single time. There's your 1 minute, turtle soup into your POI. Look for a break of the 1, back into a 5 minute is your first point of call. Your 5, then your 15. So if you're bearish off this high, you're looking at inefficiencies inside of a discount, and then you're going to look for the liquidity on the low. Okay, if you're long of this breaker block, you're going to pay yourself inside inefficiencies inside of a 5 minute premium. You're going to hold runners to take out the 5 and 15 minute liquidity. Um, 2 degrees. This is elite plan. It's a commissioned indicator, so it's separate from the elite plan. Brother Free, which liquidity are you looking